You know, we thought that was interesting. You just heard venture capitalist Alan Patrikoff of Graycroft Partners tell us that on days with worrisome news flow and a drop like this on the Dow intraday, that is worrisome and scary, right? But Alan said this too shall pass. We thought, let's give you a little history lesson. We've had quite a few Mideast crises. Let's look back to 2019. All right, 2019, the Dow was moving mostly up in a tight percentage range, except for in September when the Saudi Arabian oil complex was attacked by Iranian drone squads. That's the top left there, and you can see the market fell down about 0.5%. Iran oil tanker attack on June of 2013, up 0.33%. Iran shut down a drone in the U.S. That was on the 20th of June. Market went up 1%. Embassy attack was just at the end of December, up 0.25%. We want to bring in Paul Dietrich. He's the new portfolio manager at B. Riley Wealth Management, $10 billion in assets under management. And our traders at the New York Stock Exchange and CME Group, John Gagliardi and Phil Flynn. Phil, let me just jump to you first. Oil, obviously a big story. Jet fuel spiking. We've got airlines down. But we saw similar issues back when the Saudi oil complex was attacked in September, and then the whole thing just petered out.
It really did. You know, it's a new world. You know, if you go back to the first Persian Gulf War back in 1990, you know, the prices of oil doubled, you know, in a couple of months. And then when the bomb started to fall, the prices came right back down. Yeah. Now we're living in kind of a new world where we look at the event, we react to it on the price, we price in more risk, but then we look at the big picture and we realize the U.S. is producing about 12 million barrels of oil a day. There's a little bit of a cushion in the marketplace, so there's no need to panic as long as these situations calm down quickly. We remember with Saudi Arabia, they brought production back online a lot quicker than anybody thought, and everybody was waiting for the next shoe to drop, and it really hasn't dropped in a dramatic way, and that's where we're at today, right? The oil prices went up. We took out this Iranian commander. Now, what's next? And that's why the oil market right now is tentative, but if nothing happens, we'll probably see oil prices come right back down.
Paul, we just want to remind our viewers that the president came out about 13 minutes ago or so and said, we did this to stop a war, not to start a war. One could argue that America has shown some pretty significant restraint over the past couple of months. The Iranians shot down a drone. They had an underwater attack of, one of the ships in the Strait of Hormuz. There have been all kinds of issues. And then this attack on the U.S. Embassy, you had a U.S. contractor who was killed. Let's talk about what you do, putting aside the human toll, which is, of course, significant, what you do as a stock purchaser on times like this. Earlier today, the NASDAQ was down more than 100 points. It's come back. Was that a window?
Well, we're long-term investors at B. Riley Wealth Management, and I think long-term investors have to make the distinction between a foreign policy event that has no impact on the U.S. economy and one that does. And I don't think that this does. As I was coming over here to the studios today, I talked to a defense industry analyst, and he's been on the phone with the Pentagon and the State Department all morning. And he says there seems to be a consensus that Iran could do two things. One, it could use cyber attacks or Hezbollah and attack things in Syria, Lebanon, Israel, and those wouldn't be major. Or they could sink a ship and block the Straits of Hormuz. That would be major. But the military has been practicing and anticipating this for decades. They know how to deal with this. They believe that within 3 or 4 weeks they can deal with any blockage of the Straits of Hormuz. They would, in fact, inflict a lot of damage on Iranian military infrastructure. But the good news is, even if it lasts a couple of months, we have a glut of oil in the world. That's what's keeping down oil prices. And if you look at national reserves, we have 4 to 6 months of oil reserves. So that means this is not going to have one bit of an effect on the U.S. economy or the world economy in the long term.
John, on the floor of the New York Stock Exchange, let's mark it. 9 minutes left of trade. What do you think happens here? Do we go lower? Do we stay where we are, or come back up off the floor even more?
Liz, when I was researching this, it was mind-boggling when I looked at the prior Gulf Wars. With the first Gulf War under Bush Sr., 1990, 1991, at the same time that happened, we were also going through the savings and loan scandal, and banks were failing.
Yes.
And yet, we figured it out. And the early 90s through 2000, one of the best expansions in world history for both the stock market and the economy. And we go to the next big encounter where we have both simultaneous wars in Afghanistan and Iraq. But not only that, we also went through a financial collapse, a dot-com bubble. And it's amazing the resiliency of America. We figured it out. 2013 to present, it's one of the largest breakouts in world history of any stock market. And we're continuing to expand even as we speak.
Paul, John, Phil, thank you, gentlemen. We are coming right back.